Right, good evening. Welcome to today's session. Right, I hope you managed to look at materiality and the audit strategy as I asked you to look at. I think we discussed some of the things in a rush, but I thought that maybe to just go back on that, since I gave you the guidelines, it might be easier for you to look at those things. And then if you have got any problems, then you could ask questions. So I decided to move on so that we look at internal controls, considering that very soon we'll be having another test, I think by the beginning of June. Right, so today we're going to move on to internal controls. Today I'll be mainly focusing on the theory behind internal controls and communication with those charged with governance. Then next week we'll then look at the questions on how to deal with questions on internal controls. So at the end of the day, you should be able to know the controls that can be implemented in various processes within the organization. It can be ordering, it can be sales, it can be when maintaining the master file. You should know the controls that can be put in place so that our systems will produce information that will be accurate and relevant to the entity. And you should also be able to identify weaknesses in a system of internal control. Given a scenario, you should be able to tell what are the weaknesses, both within the controls that are in place and also in the way documentation is done. So you should be able to see weaknesses in working papers and stuff like that, and be able to make corrective action. So next week we'll be looking at the questions on that. Right. So today our main focus will be on understanding what are internal controls. So our main focus will be on internal controls. Right. As an auditor, you are required to obtain an understanding of the auditee and the control environment. So normally there are various ways in which you can get that or understanding. You can even ask for the organizational chart. You can go and inquire, maybe have a meeting with top management, and sometimes even have access to lower levels so that you can be able to understand everything about that organization. Right. So first of all, there are many aspects that we'll be looking at on internal controls, but my main focus will be on two. The other ones you can just look at them maybe in your recommended text. Right. We are going to be dealing with internal controls. Right. Now, what are internal controls? Right. These are systems, procedures, and policies that management is put in place to ensure that all financial transactions will be processed properly, and all the assets of the entity will be safeguarded, and all the applicable laws and regulations will be adhered to. So these are the policies, systems, and procedures that are there to ensure that everything within an organization will be done in a way that furthers the objectives of the entity, that drives the organization towards achieving its objectives. Right. So these are processes, policies, procedures, and activities which are designed, implemented, and maintained by those charged with governance. So you'd find that the board of directors is responsible for making sure that everything is in place. But of course, they work with what? With management and other employees. Ensure that the entity achieves its objectives. Regarding the following. Regarding the assets. Reliable financial reporting. Value for money in operations. Efficiency and activity and effectiveness in operations. Compliance with applicable laws and regulations. So that is anything that we've put in place to ensure that we achieve that drives us towards achieving our objectives as a way of controlling the actions of organizational members. It can be from when they come to the workplace, whereby we say there's a biometric system, whereby when you are coming into the workplace, you have to log in. There is security at the gate so that outsiders cannot just come in. There's a security guard who logs in all visitors that will come to the place. So internal controls, they start even from members when they come to the organization. When you even go on your laptop, there is a password that has to be in place so that not every person can be able to access the computers. The computers, the windows should always be closed so that if there is rain, our computers will not and documents will not be in danger. We should always switch off the lights so that we can save on electricity. Or top management should declare their interest. All those are controls. Human resources, when you are employing, we should only employ based on merit. And there are procedures in place whereby they do the interviews, recruitment, and stuff like that. All those things are internal controls that are there to ensure that everything is done properly. But we narrow the internal controls that we focus on in this module. The internal controls that we mainly focus on are those that usually affect financial reporting and maybe maintenance of assets. Those are the ones that we mainly focus on. Right. Then we look at the component, like internal controls can be manual. Can be manual or automated. For example, when we're talking about a manual control, we can say the gate is locked when everyone goes out of the office. There is an employee who logs visitors. The supervisor has to sign documents when a payment is being made. all overtime should be approved by the supervisor by signing the timesheet. Those are manual procedures, but they can also be done through the computer. For example, we can say all transactions will only be updated on the subsystem or the pastel system by the supervisor. When you are logging into the system, you cannot access everything there. If you are a receipts clerk, you can only access receipts. Those are automated controls. So we'll look at both automated and manual controls. There will be some relationship along the way. Right. Components of internal control. So as an auditor, from an auditing point of view, we remember that from the last topic, we were talking about the risks. You were identifying the risks, and after the identifying the risks, you were determining your materiality, and you were designing your audit strategy and your audit plan. So your understanding of the internal controls would be targeted towards addressing the risks that you have identified. So you should obtain an understanding so that you can limit the risks that can so your focus will be on the controls that will ensure that the risks that you identified can be addressed. Right. On the components of there are about 5 components of internal control, but my focus will be mainly be on 2. So maybe when you get time, you should look at the other components of internal control, but I think we looked at them when we're doing planning. But I will mainly focus on 2, the control environment and the control activities. Right. When we're talking about the control environment, this is the environment in which the organization is operating. It can either promote the working of the internal controls, or it can weaken the working of the internal controls. For example, if there's a corrupt management team and corruption is cascaded throughout the organization, regardless of the controls in place, they will always find ways of making sure that they are ineffective. Right. So when we talk about the control environment, this is the control. Consciousness. Of the entity, which includes organizational structure, management's attitudes, and awareness towards internal controls. It will also go to other employees of the organization. How do they view the policies that are in place? Do they follow them to the letter? What are the repercussions if someone breaches whatever policies that are in place? What is the approach of management towards that? Maybe they just let off workers when they when they do not follow policies. Maybe they are strict to the extent that everyone who does not follow a policy will suffer the repercussions. So all those things we have to understand. Right. So within the control environment, we have the following. You can further read them in your study, in your recommended text, but I will just briefly explain them. Communication and enforcement of integrity and ethical values. I think we talked about the ethical principles. So we're saying a management should have the honesty and truthfulness, and they should have proper ethics. When we're saying they are straightforward, they are not engaged in corruption. They don't just operate in clandestine manners. They are not involved in shady deals. So we're saying if our top management have the integrity, it is likely to cascade downwards. Right. So we're saying controls can only be effective if members of the organization respect and understand the controls. So as an auditor, you have to check, is this organization, do they give value to the controls that are in place? For example, you can maybe check the disciplinary hearings that took place over the past period. You can even inquire from employees. Casually, you can, as an auditor, you can just ask as if you're just talking about a story. Then they can tell you a lot of things that happened. Once you're you can just ask, what if an employee comes in without logging on? Has it ever happened? They can tell you that it has happened. Okay, one time the system was damaged and people entered without logging. Then you see, okay, what happens if that if maybe an employee just comes in without logging? Then they give you the information. From there, you can be able to understand. Then you see what was the reaction when that happened. What did management do? From there, you can be able to check the consciousness of management towards internal controls. Or maybe you can even check the legal issues. I think last time we dealt with a case whereby the CFO had gone to court already. That should bring questions on the integrity of management. You can go in an organization, then you hear a lot of cases of theft. You see that in a year, there were 30 employees fired because of theft. So how many more were not caught? And you can see that maybe the cases were even involving top management guys. You hear that the management team that came now, it's a new one. And before that one, there was another one that went because of cases of corruption. Already, you know that there's a culture of there's a lack of integrity within the organization. So that can render internal controls ineffective. I think later on we'll see that when you are deciding when you are devising your audit plan, I think we talked about that. If you see that the internal controls are not being followed, you can't rely on them. So you have to do more of substantive procedures. But when you are happy with the internal controls, then you might even do less of other procedures. All right. Then related to that, there should be commitment to competence. What is the attitude of management towards ensuring that everything is done according to the standard, according to the expected standard? This commitment can be seen in their recruitment processes. You can just inquire, how do they employ people in finance? Just go in the files to see how were they employed, were they interviews? You'd find that maybe they were just referred. Maybe you find that everyone in finance was referred. Then you go and check, let's see their qualifications. You see that there's not even a single person who has got a qualification in accounting. Then you check, was there any development that happened? Maybe courses that the company is giving to the employees. Was there any orientation and stuff like that? So that they can understand the processes. Through that, you can be able to evaluate the commitment towards competence. Right. Then we've got participation. by those charged with governance. When we talk about those charged with governance, in a company, we're normally talking about the board of directors. Right. So you'd find that the attitude of the board of directors is likely to affect how management, because we have shareholders. After shareholders, we've got the shareholders. They don't normally have anything to do with the organization unless we've got other shareholders who are on the board. So we talk mainly about the board. The board is responsible, even according to the King IV Code, as we talked about in our previous topics, for making sure that the systems are in place that to ensure that the organization attains its objectives. So if those charged with governance are not interested in the internal controls, if they don't show interest by evaluating them, improving them, reporting on them, then those internal controls are likely to be weak. So what we're saying is the directors, top management should demonstrate commitment towards improving the internal controls and making sure that they are implemented to the letter, and reviewing them from time to time to make sure that they move with the times and they can be able to achieve to help the organization achieve its objectives. Because if only the low-level employees are serious, then the internal controls will not work. Right. Management philosophy and operating style. Right. The way that they do their day-to-day management. We're now on management. From number C, we're on directors. Now we're on management. So how they do their work will influence the lower level employees. If your manager is known for breaking the policies, what can they say to you if you break also? They can't say anything. So the management philosophy and operating style would affect a lot the effectiveness and efficiency of operating controls. Organizational structure. The structure of the organization should permit the working of controls. So the nature of your organization should suit the structure that you're going to implement. I think in management, you've learned about the matrix organization, the toe structure, the whatever, all those structures. They should support the effective implementation and design of controls that can enable the organization to achieve its objectives. Right. Then assignment of authority and responsibility. The way that you assign authority will affect the effectiveness of your controls. We should know that authority should only be given when it's supposed to be given. And remember, responsibility will always remain with top management. You can delegate the authority, but you can't delegate responsibility because you will still be responsible. Even if you delegate to a lower level, the directors, when they delegate to management, they will still be responsible for the actions of management. So we're saying we should make sure that individuals are given the authority and responsibility that ensures that they can be able to implement the controls that have been put in place and they can be able to effect them. All right. Then we've got human resources policies and practices. We should have practices that help our members to be able to work within an environment that ensures that everything goes on well. Train them. Do performance appraisals. We should see the need for training and the need for improvement. If there's a problem, let's talk to them. Do we have policies in place that can ensure that our employees can be the best that they can be and ensure that the internal controls can work? Because if you've got someone who doesn't know what they do, they might be willing to make sure that the internal controls work, but because they don't know, they can't do anything. So at the end of the day, as management, we should make sure that we've got policies in place that ensure that our practices can be able to improve actually the effectiveness and efficiency of the internal controls. Right. Then I will also, as I said, that I will not look at all the items. I will talk about control activities. The activities that can be put in place to ensure that our processes our controls are working. Right, they can be approval and authorization. Right, we can say that you cannot, all expenses for petty cash, they can be approved by a junior finance person. Then we can say that major expenses that are above 5,000, they will need the accountant. Then we can say if the payments are above 50,000, they need a further top executive. Big contracts would need to go to tender, and they should be authorized by the tender committee. There is no capital expenditure that should be done without approval through the budget, and they should go through the procurement committee. So these are systems of controlling and making sure that everything happens according to procedure. So this approval authorization, normally we can say it can be through, maybe, let's say, for example, a resolution from the directors meeting. It can be through a document that is signed. I think we now know that signing can now be done manually or via the system, computerized signing. So that can be one of the ways in which we can undertake our activity. We can also have segregation of duty. We know that humans, sometimes they take advantage if they see that there are lapses in the system. They are likely to take advantage and abuse the system. So in organizations, we should have what we call segregation of duty, whereby related activities, they will be given to different people. We can say the person who receives the money is not the same person who is going to go and bank the money, and is not the same person that will record the money that is banked. Because when he receives 100,000, he can take 10,000 and then bank 90,000 and record 90,000 in the books. So we won't see anything. But now, if he's receiving and he knows that I'm not the one banking, the next person will then come and collect the money, check the receipts and see that, oh, there's 100,000. Goes to the bank. The one who records in the books again will depend on the deposit slip to see that the money is deposited. Then there will be a supervisor that will come and check all those activities to see if they are, they've been done well. So we're saying related activities should not be done by one person. They should be done by different people, so that we can be able to see so that everything can be bona fide. The one who fills in the timesheet should be different to the person who is going to approve the overtime. And that person should be different to the one who will effect the payment. Remember, the first person who do the payment will also check the documents. So that is what you call by segregation of duty. So we're saying related activities should be properly, there should be proper segregation. Then we've got isolation of responsibility. When we talk about isolation of responsibility, we should have a way of knowing who did what. If our systems, let's say, for example, if we've got two phone calls, two phones, whereby any of our order clerks can receive the call, record the call, and maybe pass over the documents using one computer to warehouse and stuff like that. If an error happens there, we won't know who did what, who caused the error. So we should find a way that everyone will know their responsibilities. And at the end of the day, even if we've got 10 order clerks, we can be able to trace that the one who did this was this one. Actually, signing a document is isolation of responsibility. If you see my signature, you will know that, okay, it's Kamanga who approved this payment. You know that he's the one who was responsible for approving this payment. So signing is one of the major ways that we can be able to use to as a control activity. So when you have got, they can give you an exam, an ordering scenario, you have to make sure that you say, okay, when goods are received, the receiving clerk should sign so that he has checked the goods that were received. Then we should know that, okay, security checks the goods and whatever, we isolate the responsibilities and stuff like that. Right. There should be also, I will talk about them again, some of these controls when we talk about automated controls. Access or custody. We should have ways. One of the control activities is to limit access. Access can be physical, whereby people cannot just get into the offices. And even employees themselves within the organization, they have limitations on the places that they can be able to access. Employees should not just have access to the computer that processes their work hours. They can come and make adjustments there. And the purchase clerk should not have access to the cash book. So he can enter on the Pastel system, but he cannot open the cash book because he's responsible for sales. He can only do the sales part. So the other areas he cannot access, although he can, and also we can have something like read only, whereby you can access some things on the system, but you can only read. You can't do anything. You can't adjust. For example, a master file. There should be people responsible for adjusting that master file. But let's say your job requires you to see some of the data. Let's say, for example, customer data in the system. So you can access the master file to see the details that you need about the customer, but you cannot adjust anything. You cannot increase the credit limit. That will be done by the credit controller, the credit department supervisor. So you can go there, check, okay, the credit limit of this guy is 100,000. So even if it's your relative, you can't just increase it. So access can be physical, or it can be maybe through automation, whereby we're saying the areas that you can access within the system of the entity. So there should be systems in place that limit that access. So that is one of the controls that can be put in place, so that we know that, one, outsiders should not access our systems. Number two, even insiders, they should only access what they are authorized to access. That is physically and technically, and through our automations. Right, we have got comparisons and reconciliations. At the end of the day, you can have your creditors ledger, and you can have your creditors control account. At the end of the period, we find the balance in our creditors control account, and also we do a list of data as they appear in the ledger. Then we compare the two. Our control account balance should tally with the list of data as they appear from the data's ledger. If they don't tally, then we do a reconciliation to see what is it that is causing a problem. That can also happen through bank reconciliations. Then we can do comparisons. For example, we know that during the year, we didn't have any resignations and there were no promotions. We didn't have any new employees. And we know that our salaries were increased by 10%. We can compare the salaries for last year and this year. Definitely we should accept, we should expect a jump of around 10% exactly. There should just be maybe fewer changes, maybe let's say because of the difference in overtime. But then if we compare and we see that there is an increase in salaries of 40%, whereas we only made an increment of 10% and there were no new employees and there were no resignations, that will raise questions. So comparisons can be used to help us to control our items. Another comparison, you can compare what is in your asset register to what you have physically. There are vehicles there, you go and check the vehicle, the engine, the chassis number, the registration number and everything. Then you see that this is the vehicle that is in the asset register. You can do an inventory count at year end. I think we have seen shops, they tell you that they are closed because from inventory counts. So they can also be, it can also be another way of controlling the activities. Right, we can also have performance reviews. We can have a supervisor occasionally. He just checks the ledger, how it was done during the period. He doesn't do everything. He can check a few transactions. That can also happen. When you are also reviewing your performance, you can review by comparing the budget against the actual to see what are the differences. You can also compare to your key performance indicators. Remember that at the beginning of the year, you can set that by the end of the year, we want a return on capital employed of 20%. We want our productivity to improve by 10%. We want the inclusion of women within our top management to increase from 40% to 70%. We want our pollution to go down by so much. So those key performance indicators, or maybe if you're using the balanced scorecard, you check whatever are your targets versus your actual performance. You can also compare your performance to the previous period. You can compare to industry averages. That is also a performance review. So those are some of the controls that can be able to detect and ensure that we don't have deficiencies within our systems. So those are some of the control activities that can be done. So as we answer our questions, we should be able to check where there's supposed to be approval, if the approval was done. Where there's supposed to be segregation of duty, we should be able to identify that these duties should not be done by one person. Because as you shall see next week, the way they ask you a question, they will ask you what are the controls that should be put in place to ensure that let's say the ordering system is done properly. What are the controls that should be in place with regarding to inventory? So you should be able, number one, to give the controls, the control activities that can be done, and you should also be able to state the control objectives. That is why and what is achieved by that control. And you should also be able to identify, as I said, you can be given controls. You should be able to identify weaknesses in the system of controls that you have been given in a particular question. Right. There are many ways in which
Eugene,
yes.
there's somewhere where I was reading, they also said one of the control is information processing. Is that so?
Is what?
And information processing. It's one of the internal controls activity.
Remember that I've left out about 3 items.
Oh, okay.
In terms of the remember I said that I'm only focusing on 2 in terms of our controls. Is that right? There's an area that we talk about that that information. Is that right? We've got actually 5 areas. Is that right? Which is the control environment, the risk assessment process, then information system. That's what we are talking about, isn't the information system?
Oh, Mina, I thought it's one of the internal controls, one of the ones that you have named. It's one of them.
It's part within, like everything that we're talking about is within the internal controls, then the monitoring, but it's not a control activity.
Oh, okay.
But our system is part of the controls that can be like, it's part of the general internal controls that can be there. Is that right? When we're talking about control activities, these are the activities that will be done within that maybe information system or whatever it is. Of course, our information system is part of internal controls, which is, we're saying our control environment is made up of 5 things, of which the information system is one of the 5.
Oh, okay.
It's a separate item other than the control activities.
Oh, okay. I thought it was one of the control activities.
No.
This one.
Remember that, as I said, there are 5 things within our control environment, within our components of internal control. Sorry, we've got 5 things within our components of internal control. Number 1, we've got the control environment, which I talked about. Number 2, we've got the risk assessment process, which I said I'm not going to look at it. We looked at it through whatever we're doing in the last chapter. Number 3, we've got the information system. The information system, I'll be looking at it through the various control activities that we'll be talking about. That's what we're talking about. Number 4, we've got the control activities, which is what I've been talking about. Then we've got the monitoring of controls, which is number 5. So it is an aspect, information system, within our internal controls. You are very correct there. I hope you are answered.
Yes, I am. Thanks.
Okay. Right. There are many ways in which we can differentiate our controls. Especially, we mainly use 2 ways in which we can separate our controls. Right. So I will talk about one of the ways now, and then the other one I will talk about a little bit later. Right. We have got our controls can be divided into 3, or we can divide them into 2. Right, whereby we divide them, when we divide them into 3 categories, we have got what we call preventative control, number 1. Preventive controls. Right, so these controls are designed to ensure that errors or omissions do not take place. So these are controls that are put in place to prevent errors, frauds, and illegal acts. Remember that problems can happen deliberately or by mistake. An employee can genuinely fail to capture a receipt without any ill intentions. And the money is banked. It's there in the bank account. But we see that 10,000 was banked. But in our records, there's only 8.5. They didn't want to steal the money, but it was by mistake that they didn't capture the 1.5. The money was not taken for personal use. It went to our bank account. The one who did the banking correctly captured that the amount for sales for that day was 10,000. So we can, and sometimes it can be deliberate. An employee can steal the 1.5 and record 8.5 instead of 10,000. Right. So we can put controls to prevent that. For example, segregation of duty is one of the controls that are put in place to try and prevent whatever that act from happening. So we are saying we can even put things like authorization. We can say all purchases that are above 50,000, they should go to tender. Normally, when we do purchases, there should be 3 quotations. We are trying to prevent corruption along the way. So preventive controls are put in place in a bid to ensure that problems do not happen. Right. Then number 2, detective controls. Right. Now, with the detective controls, that means a problem has happened. And these controls are there to be able to note that there is a problem. Right. So these are controls that are put in place to ensure that the system can discover any discrepancies. They can be by error or by fraud. For example, we can have security at the gate who will be searching employees when they go out, so that if someone is stolen, they will find it. So it can work, some controls can work as a preventive or detective. Because, for example, when you put your security, it's preventive in the sense that when employees and customers know that we have got at our shop a security, they know that we've got cameras, they are likely to be to have that not to steal, to think that, oh, maybe I'll be seen by those cameras, that guy it's the security will see me. That is preventive. But it can also be detective in that those cameras can be able to see that someone is stealing, someone is going out without paying. Those security can be able to search and be able to discover that an employee had stolen stuff from the from the warehouse. So detective controls, so you should be very careful that some controls can achieve both preventative goals and detective goals. Right. So we should see the context within which the control is being implemented to see whether it's a preventative or detective control. So we're saying with a detective control, it actually locates a problem after it has actually occurred. When you put in antivirus, then if there's a virus there, it can prevent the virus from attacking your system. But at the end of the day, it can also detect a virus which is in the system. Right. Then we've got corrective controls. These are controls that are put in place in order to limit damage or eliminate damage after mishaps take place. So we're saying a problem has happened. How do we correct that? We can say, for example, when we can have a disaster recovery plan in place that can be able to correct the problem when it happens. So when we are talking about corrective controls, we're saying something has happened. How do we, at the end of the day, rectify the situation so that we can be able to operate again normally? So this is one way in which we can differentiate our controls. The other way we can talk about general and application controls. So normally this is discussed mainly under automated systems, of which I'm going to briefly talk about them today, and then we'll do much about them when we do the questions. I rather ask you to read some of the things so that next week we go straight to the questions. Right. Before I go to the automated systems, I'll briefly also look at limitations of internal control. Right. Internal controls are very, very, very important in that they can ensure that our operations, they operate smoothly and efficiently, and they guide the organization towards achieving their intended objectives. But they can do as much as where they can go. There's an extent that we can't 100% rely on internal controls. Right. So the limitations, when we say the limitations, we're talking about the weaknesses that normally make our internal controls not to be 100% relied upon, not to give absolute assurance, not to give as much reasonable assurance as we would desire. Right. The requirement that cost does not exceed benefit. When you are implementing a control, you have to make sure that the benefits that are likely to be derived, I think from a business point of view, we should always try to make sure that whatever we do, the benefits far outweigh the what? The cost. In as much as we might know that there is a CCTV camera system that has to be done, that we should have at our shop, but maybe we've been told that that would require a huge amount for us to implement, and we are just a small shop. In as much as we know that that CCTV camera will help us to identify theft and stuff like that, but it might be beyond our cost. So because of that, there are controls that can make our system foolproof, which are not implemented simply because their cost might outweigh the benefits. So at the end of the day, you would find that organizations, they don't implement all the controls that are required. You'd find that if you're a small shop, you can't talk about a procurement committee. You can just have one person who will be doing the buying, and that person can buy from friends, even at inflated prices. And you might not even know it because there's no what segregation of duty. Because you are just a small shop. For you to do segregation of duty, it might mean employing many people. You can't afford that. So at the end of the day, sometimes the internal controls are deficient because we can't implement all the necessary controls due to the higher cost that might be required. So at the end of the day, we can just do as much as we can and leave out some controls, which will make our controls weaker. Right. Right. Internal controls are usually targeted at routine transactions rather than non-routine transactions. You'd find that when you set your controls, they usually they're designed to address the things that you normally face on a day-to-day basis, but they might not be able to deal with some situations which are serious, which are which might happen during the year. For example, if you strictly sell for cash, your controls will be targeted towards cash sales. But then if it happens that during the year some credit sales were authorized, there might be a problem that your system might not be able to deal with them. Maybe unusually you did a lot of capital expenditure during the period which you don't normally do during the other years. Your systems and your controls might not be able to properly address those scenarios. So you'd find that there can be problems. Maybe you've never had returns, but because you bought goods that were inferior during the year, there were a lot of returns. Your system might fail. Your employees are not used to it. So you might not properly account for that transactions. So we're saying controls are usually designed to deal with the ordinary, our day-to-day ways of doing things, rather than things that are non-routine. So because of that, there can be a weakness if non-routine events take place. I think you saw what happened during Corona, some of the accounting issues that arose there. They could not be properly addressed because people were not used to what was happening there. Right. There can also be the possibility of human error. Although the controls are there, there can still be a misunderstanding by those who are required to implement the controls. So it can be due to various reasons. Maybe they didn't understand properly, or maybe they were not even concentrating, they were on a phone call whilst driving, but you've got controls that you have in place. Then those controls will not even work. In that particular, they were using a machine under the influence of alcohol. Although procedures and internal controls are in place, they might fail to judge properly and cause an accident that can be fatal. So we should know that controls, they happen within an environment. That application is mainly done by humans. So although the control can be there, and we know that there's a control, there is a possibility that those who are supposed to be implementing the control may make errors, which will render the internal controls ineffective. Probability of circumvention. Circumvention of controls through collusion. We might go as far as segregating duty. We say, okay, the one who receives the goods at the stores should be with security. Security should see that the goods, should check the goods, and also our receiver should check the goods. Then the receiver, when he goes to stores, they should check the goods and stuff like that. But you can find that the security, because they are working together, maybe on a daily basis with the receiving clerk, they can negotiate and say, no, we can make money here. Then they tell each other to record that the things the goods have been received properly, but then they take some of the products. Then our controls will be rendered useless. You find that you have got a shop, then the security tells their relative to go in the shop, buy 2 things, and then put 10 in the plastic bag. When they are going out, they just show the receipt, they know each other, they pass through. So there can be collusion, which can render our controls to be not to work as we should expect. Right. Abuse of responsibility. The person in charge of making sure that the control works. That can also be linked to collusion, although now this one here we're talking about maybe an individual on their own. They can abuse their power and do what they are not supposed to be doing. Maybe, for example, you might have a manager who is in charge of approving purchases, and we have the segregation of duty. Then he tells the junior employee without collusion to tell him an order. This junior employee who processes the thing that, okay, go and buy from ABC Limited, even though ABC Limited is not an approved supplier. And this junior employee has no option except to process the purchase. A supervisor can approve their own overtime and tell the junior employee who is processing payments that, don't worry, just process that payment. And because they are junior, they will just process the payment because they are afraid. So there can be abuse of authority. Right. Controls may be rendered ineffective due to changes in the operating environment. You might find that there are some organizations that we find that they are using a manual that was created in 1990. That manual is still being used now. Or new employees, when they come, they will be given that manual. So then they will be using that manual. So now you would find that if circumstances change within which the organization operates, some of the controls that we might have put in place might be rendered useless. They might no longer be necessary. So at the end of the day, we are supposed to make sure that we review the controls that we have from time to time, so that we can see if they can still be relevant within the business scenario. Right. So those are some of the weaknesses that can be the limitations, not necessarily weakness, the limitations of internal controls. So because of those things, we can't put 100% reliance on internal controls. So as an auditor, maybe when you are auditing, you have to check, are the internal controls, are they adequate? Are there possibilities that human error could have influenced the effectiveness of these controls? Was there collusion? As you remember that they say that you have to use skepticism. You should have a questioning mind to be able to see some of those things. So in as much as internal controls are there, there's a possibility that they might not give us the desired results. All right. Then I will just introduce an area that I want you to look at. Because as I said, next week I'm going to go straight to questions. So I will discuss both manual and automated controls through questions, and then the reporting part also through questions, so that we can be able to understand how to address things like controls. Right? When you come to automated controls, controls are divided into general and application controls. When we're talking about general controls, these are controls that are in the environment of work, that before you even do the work yourself, before you interact with the system, these are sort of inbuilt controls that are there prior to anything being done, prior to any processing being done in the system, prior to any input coming into the system. We already have these controls, these general controls. For example, if we say there should be a password when you log into the computer, that's a general control. So that means before you do any work, you are a receipt clerk, before you do any receipting, you can't log into the computer before you put your username and password that are valid. When you get in, because you are a receipt clerk, you can't access the payments. Even to get to your office, the office is locked, you need the keys. Those are general controls. Then when we talk about application controls now, these are controls now that relate to the job that you'll be doing now, when we are now on the system. For example, we are saying the segregation of duty. The one who receives the order is not the one who approves the transfer of goods to the customer. That's now applying we're now applying and doing the actual work. The supervisor is the only one who can approve payments, who can approve overtime and sign on the system and approve on the system that indeed overtime was worked. So that is application controls. So application controls, we're saying now, is the humans now working on the system and doing, these are controls that ensure that when they are working, they do all the things, all their work in the proper manner. Whereas a general control, we're saying before they go in the system, there are already systems that are in place without any interaction from the users. They are already put in place. Right. So we're saying general controls these are controls that are in the computer environment which are in place prior to any processing or user interaction. So they are sort of a sort of inbuilt. We're saying our structures have got those controls already. They are already there before we even talk about doing anything in the system. Before you think about doing the asset register, which you are maintaining, there are controls which you have already put in place. There are things that you can't alter. Right. Then application controls. These are controls that are in place and applicable during processing. And require user interaction. So we're saying now with application controls, it's now when you do your work. These are the controls that you now apply when you are doing your work. What you can do, you as the user of the system. Right. So what I want you to do is part of your homework. I want you to read on the following. General controls, and application controls. In a computerized environment. And when I come, I'll just come with questions that we shall be able to, I want us to be able to locate the controls that are in place and also to be able to, I think I will talk about the weaknesses later. The first thing I would like us to locate the controls and also to be able to state controls that can be put in place in a particular system. Any questions? No questions. Okay, if we don't have any questions, then we'll continue next week. Thank you so much, and God bless you richly.